Well, hello and welcome to another story and another video in my One Company, One Story series. This time, Therapeutics, which managed to get the trading symbol of FATE. Congratulations to them. Anyway, here comes the amateur legalese. I began investing in companies and their stocks in the late 70s, but am not a certified investment professional. My style and history of investing is described in Dream, Invest, Live, a book I wrote by request because folks like the way I described finance, I guess. But it came out as the Great Recession or the Second Great Depression began, so don't underestimate luck and timing. Um, my personal finance blog is also trimbathcreative.net. It's been going on for over a decade now, so tune into that for a lot of history if you want that. But I am not an investment professional. This is not financial advice. What I like to do is I like to talk about companies because so many times folks talk about the stock and they kind of ignore the company itself. So, Fate Therapeutics, you can see on the screen, but they have a quote in one of their other press releases and a bit of marketing, which is to produce better cell therapies. We apply our proprietary iPSC product platform to create multiplexed-engineered clonal master iPSC lines having preferred biological properties. So I go back to Shakespeare, so that as is clear as the summer sun, which is a parody on making fun of the fact that sometimes folks explain things way too more complicated than they need to be explained. They, Fate Therapeutics, uses special stem cells to treat cancers and autoimmune disease. At least they hope to. They also use killer cells. Investing in biotech requires trusting to luck or learning a lot of arcane words that are more accurate but not necessarily more descriptive to those of us who, without advanced degrees in biology, medicine, chemistry, and things like that. Disclaimer, my degree is in aerospace and ocean engineering, so in my opinion, Fate's technology is tougher than rocket science. The hope to part comes in because they are an early stage company. They have a few treatments in phase 1 clinical trials, which is one step past lab studies, but a couple studies more away from commercialization and treatment and treating the general public, as I understand it. So let me just show you their pipeline. And I was actually pleased with their website. I'm talking about them rather than some of the other biotechs because some of the other biotechs had some websites that were so hard to understand that I didn't want to have to go study them to that level. But you can see they're showing a half a dozen different things, 4 for cancer, 2 for autoimmune, and they are into phase 1 and 5. So I guess there's 7. Okay, but 5 of the 7. But phase 1 is not phase 2, phase 3, or commercialization. Fate Therapeutics is yet another classic risk-reward trade-off. Developing treatments for combating one cancer is big enough. Dealing with more than one can have a multiplier effect. Adding autoimmune treatments is a similar broad branch that is approached with a narrow opening. Cancer and autoimmune diseases are paired because they both are influenced by controlling cell death. Cells that die too soon can be autoimmune. Cells that die too late or never at all can be cancer. So, as I understand it. So that's all good because autoimmune diseases are a big thing and so is cancer. The risk is that novel technologies must be proven in an already heavily conservative industry, ultimately healthcare. The reward is that many existing treatments are not as effective as desired, so there is an unmet need for breakthroughs. Now, sometimes it's nice to throw up flashy graphics and all these sorts of things, but biotech is largely not very visual. So, fairly static display this time. Hope you don't mind. So, getting a breakthrough, trying to break through to a breakthrough is difficult, expensive, and there are competitors, but it's hard to tell which one will succeed. And in some cases, I think, if everybody knew what the answer was, there'd only be one competitor, and they all have pluses and minuses. While it may be fun to make fun of their description, is also necessary. Biotechs have enormous responsibilities, so must be precise, even at the cost of confusing those of us who are the uninitiated. That's where there's an advantage, though, to the investor who is willing to learn more than the less determined investor. The treatments may have high demand, but many investors want simpler investments. Uh, Lower demand can lead to lower prices, which can be an opportunity. And you can just hear from what I've just described where my line is. I'm willing to investigate it enough to understand what a killer T cell is and what a stem cell is. But you start getting one level past that, and of course, every level past the basic level reduces the number of folks that can understand what's going on with the company. So I just try to get a little bit ahead of the crowd, but not the entire crowd. Well, I don't know if it's the entire crowd, but I just try to get myself an advantages and see if it's worth pursuing more. So, without getting into pictures of molecules, what I was also curious about is what everybody else is thinking about fate. And one way to do that is to take a look at the hashtag for the company, $ trading symbol, so $FATE. Yeah, I didn't bring that up. It's on Twitter. I won't call it X. See lots of Autobot traffic about stocks, but nothing really actual human commentary to the extent that I would like to see, for instance, with some of the other biotechs I have, like Geron. So, what they're really using on their website reduces down to stem cells and killer T cells. I've invested in companies that have similar approaches, which helps me. That's one reason I can get a little bit of an advantage here. But even with that background, I will learn more before doing anything more, because that next level of knowledge is more difficult. So one thing I do is at a time like that, I look to see what the market is thinking about it, because this is about the company, but one way to measure the company is the stock, especially when stocks are being driven by sentiment and story rather than financials. Because until a company's gone for commercial, until they've been generating revenue, it's really just hopes and speculations. So after lingering under $10 for much of its early years, I mean, this is just, and thank you, Google Finance. This is a fairly nice site for doing this sort of thing. Fate spiked up to over 100 in January 2021. So just see if I can capture that. I'm getting near it. I think I managed to get it to stop at 113 the other day. Oh, 116. There you go. 116 on January 2021. Evidently, it didn't stay there. It closed at 479 on April 19th. So evidently that spike didn't stick. It's an example of how radically such stocks can move. To go from under 10 to over 100 to back down to under 5 within a few years is not as surprising, and it's also why these are stocks that have a lot of, well, that's the risk and the reward right there. The reward was it was up over 100 and heading north, and then headed south. There's the risk, there's the reward, and of course the hope is that whatever troubles that they had are behind them. Now, sometimes it's hard to get an idea from a company what is really causing such upheavals. So that is one place where I do look for commentary. And one thing that Google Finance is good for is you can highlight the news articles that were prevalent then, and brought up this one that they pointed off to, and we'll see if it takes how long it takes to load. Oh, quit it with the ads. Quit it with the ads. But what it comes down to is there has sorry, I lost the thing. I lost the quote. The website decided to rejigger itself. But I'll take it back up here at the top and at least give you the headline. What it came down to is they got to see some early data, and they were talking about the durability of the treatment. The treatment was working to some extent, and of course, it wasn't just a showstopper, great great obvious success, but it also wasn't an obvious failure. But of course, you can see from the stock didn't go to zero, but it also came way back off of its peak. Well, it looks like not so much is happening. If you just look at it from the 1 year, that's gone from under 2 to over 8. So it's come down from over 100. It still has a fair amount of volatility, which is good for some folks who like to trade on a short term. I don't. I'd prefer to, if I was going to buy this, I would probably, well, I'd buy it and I'd hold for a long time. I'm holding Geron since 1999 at this point, GERN. I'm willing to wait that long time because I understand that, as I said earlier, trading into, not trading, but investing in a company that is trying to develop technologies that are innovative can hit major roadblocks with the FDA, which has to necessarily be conservative because they're trying to protect our lives. Well, it can take years for those things to pass through. And again, as I've seen in the past with myself, with my own stocks, you look at it, the max thing, and it went from 2018, 7, 2001, 116. It's hard to pass that up. Unfortunately, there's too many times where I've bought just after the peak because it must be going, this must be correcting. It just keeps correcting and falling knives happen. Anyway, I'm going to close this off with just saying, with many biotechs, such swings are possible. Science, funding, and competition can dramatically change several times between the start of the company and commercialization. It is not easy to have these stocks because you have to be willing to wake up one morning and find out that you just lost 80% if you sold. And that is gut wrenching for a lot of folks. I'm not going to discount that. But again, there's that. That's the risk, but the reward is substantial. I don't know what's going to happen, but I hope they survive and thrive, and I'll be watching. And I thank you for listening.